Kyle Frye, thanks so much for joining us on Wall Street Unplugged.
Happy to be here, Frank.
So we've known each other for a while now. I want to say probably 2 years, right? You helped us tremendously with our process of bringing our CEO token to the market, which was a major process. We'll get into that in a little while. But let's talk about the earlier days, because you're someone that's spent most of their career in investment banking, M&A, and that is still a booming business as we see. But yet you pointed to the direction of security tokens, tokenization, going all in. What made you make that change, which is a pretty big change?
Yeah, no, I spent most of my time at Credit Suisse doing fintech M&A, predominantly payments, and really just seeing, blockchain technology was still pretty new in the ecosystem. I remember talking to a bunch of my other banker friends, particularly in the coverage group, and they were like, look, that technology is so far out, it hasn't been proven yet. But when you really start to dig in, again, spending time in payments and thinking about when you swipe a credit card, how that the payment flows through to a merchant acquirer and then to the bank, and then you've got Visa and MasterCard. There's so many different players, literally, for money to go from A to B. As you know, wiring is slow and expensive, and the notion that you can remove all these intermediaries and allow true peer-to-peer direct payments was something that I just couldn't take my eye off of. The advance of the internet, and really wanted to be a part of that. In banking, I had picked up capital market skills, IPO, what investors want, what makes a deal go through, all of the investment banking elements. In M&A, you learn to remove all the roadblocks associated with a deal, regardless. So we were always the quarterbacks in every single deal versus some of the other groups, ECM, DCM, et cetera. And then ultimately, a bet on myself. I didn't want to see all the value creation that I saw in fintech, the Shopify's coming in, the Bantivs, all the payment processors. I saw so much more value creation and upside in just payments in and of itself that I wanted to kind of jump all in to see what this technology could do, and started to really kind of see how it would impact capital markets as well, and the cost associated with that. So went all in, brought in my understanding of capital markets and investment banking, and really knocking down roadblocks as an entrepreneur is a massive skill set, as you know, to jump into the space, but saw this as a new wave, and I wasn't going to let it pass me by.
Yeah, I'm kind of thinking, though, I wish we started a little bit later than earlier, because I agree with you. And for a while that we did have COVID in the middle, which disrupted a lot of different, upset a lot of different industries. And for me, looking at this, someone that's followed trends all my life, it just checks off all the boxes of being good for the issuer, being good for the investors, being good for everyone involved, less costs, less regulation. Investors being able to invest in companies for the very first time, right? At very early stages, not when they come out at $20, $30, $40 billion IPOs. But about 6 months ago, I have to say it was kind of like, not throwing in the towel, but saying, wow, this is getting a little crazy how this market hasn't developed yet. And then, from that point on, and usually that's when it happens, right? When you're near capitulation, where all of a sudden this thing opened up tremendously. And we've seen deals here and there. We've seen Securities raise $47 million. We saw Exodus as well do Reg A offering, and now it looks like they're going to be listing on T0 and raising $75 million. Talk about some of the things that you've seen, because you're even more tied into this industry than I am. And for me, it seems like, I don't know what happened, but the last, I would say, really 4 or 5 months, I mean, there's just been an explosion. My phone's ringing off the hook. You're seeing more demand. So many more people are calling me, just not even for companies looking to tokenize, but just, future partners and looking to partner with us. But what has happened in the past 4 or 5 months that made this happen? Is it anything? Is people just realize it? Because I'm trying to figure out the catalyst, but all of a sudden it just seemed like there was an explosion of capital coming into this market, and now it's finally here.
Yeah, I think it's a couple of things. These things take time. Bitcoin's been around since 2009, and it took forever to really hit main stage adopted markets. The pandemic, I think, drove people online. I think, there's obviously some theories about the amount of time people spend gambling and going to casinos now took their money to stock markets. But the reality of it is there's absolutely a very strong secular retail investing trend. All platforms are seeing this. OTC markets, for example, saw their retail sort of indicator grow 60% over 2020. So there's sort of the retail angle in terms of just more activity in the market, and that's traditional markets and digital markets. Crypto and crypto has taken main stage institutionally. I think there was time when everyone was saying that blockchain's looking for a problem to solve. Is it really sustainable technology? Does it work? Everyone's sort of past that. So I think the technology aspect has checked the box, if it ever has, in the last 6-7 months, with, again, the number of institutions and adoption from retail side and big names, that it's sort of technology works, check. Then what's next? It's regulation. Okay, so where is regulation taking us? Well, on the security side, we do have frameworks that we can follow, and that's I think where people get stuck a lot. They start to think about, okay, how does regulation play in to digital securities? Well, it's exactly the same as it in traditional securities, and the folks that are coming in are realizing this is a new way to do it. I mean, you were way ahead of the time. You saw it coming, which I think is how you can make higher returns on your investments, to see trends before they come in. And as a founder, I know you went through, you endured a lot of pain to be a leader, as I have. But in the last 6 months, technology check, regulation, I think people understand that you could do cross-border stuff following traditional laws. Now it's on to the next steps, just as crypto adopted. It's UI UX, as you said. How is this better for an issuer? Lower cost of capital, lower administration, access to a global investor base. And then on the investor side, it's how do I make this easy? I don't want to deal with wallets if I don't need to. Some people want to. How do we make the UX better? What Robinhood's done. Look at what FTX and Binance have done in the crypto space. The market speaks. If you make something better for investors and better for issuers, it's going to take over. And if something's cheaper, better, faster, it's going to take over. It's just, these things just take a bit of time to work through the system. And I think you're right. I think the last 6 months has been sort of that inflection point towards really, when do we hit that exponential curve for more adoption on digital securities?
And Kyle, let's talk about that, right? Because you say we were early, proof of concept. Will it get adopted? Now adoption is here. Now we're seeing money pour into the industry. We need to see liquidity and things like that. But now what? Like, what is the next steps to you? Because I know what you've been doing in your company. We'll get to a minute with digital markets, and you're the president there, creating like a one-stop shop, making it easier. Like you said, people don't want to deal with wallets. They want to make this process as easy as it is open an account up on E-Trade or Fidelity and being able to buy a stock almost that day. And we're almost to that point. But now what? What do you see for the industry? Because for me, that's the difficulty, actually. Right? Because now I'm here, but I'm always conscious of someone that's been following the markets for such a long time. Research in Motion, which is BlackBerry, they invented the smartphone. They're out of the smartphone business. Apple took it over. You look at AOL, so for me, I'm always like, okay, what's going to be the most powerful forces within this industry? Where do we want to go? Because I just feel like it's 1995, 1996, 1997, and, social media wasn't even around then, other than maybe MySpace. I don't know how long, but it was... there's so many different avenues, right? We just talked about people getting websites for the first time. We never knew marketing, algorithms, AI of what's gone today, and it's still, disrupting everything, and it's going to continue to do so. Quantum computing and 5G keep going. But what is the next step here? Because it seems like it's an exciting time, but, where do you see the next stage of development taking place? Because the missing component, this is what I do, is a liquidity part, right? So you need liquidity in order for institutions to come in order to trade. It's the reason why you're seeing Goldman Sachs, JP Morgan, Morgan Stanley get into Bitcoin. They didn't have a change of heart and believe in Bitcoin, but when it's a $2 trillion industry, they're like, okay, it's liquid. We need to get in. We could generate a lot of money off of this. What are the next steps here?
Yeah, you're absolutely right. I think the end game is trading, liquidity, and volume. To us, our thesis is that digital technology is going to make digital securities more accessible in the public markets rather than trying to make private markets more liquid. I think the retail revolution is going to begin this faster than the institutional on the digital security side. The UI UX needs a lot of work. As you mentioned, if you look at STO markets, right, we're at $1 billion of market cap roughly in digital securities. Trading is generally still pretty low and nascent. I think that's on ramps for crypto. That's easeability of logging into account. That's sort of KYCing, passporting. I think we're definitely past the stage where people, I hope, don't get excited about tokenization in and of itself. I think the industry went through a few years where, it was, let's take two assets. If you tokenize one, it's going to be worth more than the one that's not tokenized. And because you have the optionality to move it around, but it never moved around. So getting the trading venues high quality, look, it's definitely chicken and egg. Getting high quality assets on these trading venues that investors want. We call them destination securities, right? Like you don't really care where they trade. You want that asset because it's something you didn't have access to before. You're going to go to these trading venues. If they have 5 assets, it's even more interesting. And if you're hitting real estate and art and fintech, and you have a bunch of different types of assets, even more interesting, right? You only get 1 or 2 up there. If you look at most of the trading venues today, they don't have more than 2 or 3 assets. So there's still a little chicken and egg problem. We're super focused on getting, we have probably 3 or 4 high quality assets in the pipeline that would give us a pretty broad menu in terms of assets that we believe people are going to want to go. And again, they don't really care where it trades, but getting the trading venue and people to understand that this is all fitting within the current regulatory framework will drive adoption. It's easy to do. You go straight to this destination securities website. You click invest now. You log in, create an account, do your KYCML. On the same time you've done the offering, you now have an account where you can immediately trade that share as well. What's interesting is, and we talked about this inflection point, the people that are driving this market today are actually the crypto folks. So Exodus, they raised $75 million. It's a non-custodial crypto wallet. They were an $800 million company, could have gone to the NASDAQ, believe in the digital security paradigm and democratization and the ease of use and lower cost infrastructure. They're a crypto company driving digital securities. INX, they just did a full IPO registered offering in the United States and listed their token on their own platform, and they're onboarding thousands and thousands of investors. Again, INX is a crypto platform with an ATS. They are touching digital securities, but it's the crypto folks that believe in the technology, they believe in the future we're going to, that are driving this adoption. And I think as you spin up this flywheel of investors and people seeing volume at the same time you're putting high quality issuances on these trading menus, it's eventually going to hit the exponential curve. And I see that probably being in the next 12 months, 2022, more trading volumes, more high quality assets, and just easier for people to do this on their mobile phone. Same way you can do Robinhood or Coinbase for crypto or Republic in terms of investing some of these platforms, but you'll be able to do that to venture small mid-cap companies on your cell phone as well, just making it substantially easier.
It makes me wonder, too, when you look at the ICO market and how these companies are raising tens of millions of dollars in a blink of an eye, right? And how quickly they could do it. And I think that audience at the time, right, and understand you're not getting equity stake. You're basically investing in this based on their utility features. And some of these companies still don't have utilities at all. So, but yet there is a type of investor that's on that site, and people believe, whether you agree with it or not, I don't even want anyone's opinion or whatever here, because I'll probably get thousands of emails, frankcurzresearch.com. But I mean, that has taken a lot of luster away from gold, because people want to, the cryptocurrencies, we've seen gains of 20,000, 50,000% gains that you'd never really seen in the stock market. Almost impossible now because companies IPO, after this Series K round, right, at 50 billion. Right. So, but that attracts a certain type of investor. With this, it's like, for me, I'm looking at this, checking off all the boxes. Hey, we got a good asset. We have a company. We're growing. We're in 2 major industries now, security tokens, financial publishing. we're giving away an equity stake, right? We've paid a dividend in the past every single quarter. But is that going to be attractive enough for that audience that trades those tokens? Because that is a big part of crypto. And yes, institutions are getting in, but they need to see these things where, it seems like I don't know if we're doing a disservice to them by not being as aggressive or having a better, what I'm trying to say? Because there's a massive crowd there that likes that stuff. That's like, hey, all or none. I'm going to make 10,000%. I'm going to lose my money. I don't care. Yeah, that's a massive audience. And that's resulting. Listen, we can't lie about it. I mean, look at the amount of volume on Binance. Look at the amount of volume on Coinbase. So, I mean, the volume is incredible on these exchanges like Kraken and keep going. Will we get to that point? Will we be able to get that type of investor over? Because it seems like that's what you need first, and then the institutions come a little bit after as it gets bigger and bigger and bigger. I just want to get your thoughts on that, because to me and you've been in this industry for a long time, I've been surprised that this industry hasn't developed even quicker, especially given how much crap I've seen having a crypto newsletter and, looking at all these things where you can't even find financials. You have no idea what a cash is. They probably bought 4 houses with it. You don't know. I would think more people will come over to this side, but, we just haven't seen it quickly. You think that could be a problem where it's not aggressive enough? I don't know.
Yeah, I think the key word is access. You mentioned ICOs, and it was crazy, right? People were raising $35 million in 10 minutes. That was unregistered security offerings. A lot of people got in trouble for that, and it was not. I think that actually put a bad taste in the mouth on the technology, right? People associated with that, with blockchain and Bitcoin, and ICOs just gave the industry, generally speaking, a bad taste in the mouth. But I think what people miss is that ICOs prove there's appetite for these early stage investments to a global audience. That's what the technology allowed. So you fast forward a bit and you have crypto markets have taken off. That was sort of the next stage in terms of, commodities like Bitcoin and being able to trade volume. But what happened there was, again, that showed volume, and I think that got people comfortable with the technology. What was next after that? Tokenized stocks. So again, the word access. People were trading millions of dollars of Tesla shares on Binance and FTX because people don't have access to the stuff. Everyone, and I think we take advantage of that in the US, right? Because a lot of the big name, $trillion, huge name companies everyone wants to own, Tesla, Coinbase, Apple, Facebook, etc., are on NASDAQ or NYSE, and you have to open a broker account, and not everyone can do that. I think people tend to think that it's accessible, but it's not. It's not accessible to everyone, and it's a proof point that people are buying these tokenized shares on a crypto exchange because they didn't have access to Tesla before. The other 7 billion people outside the United States. So again, it's showing access there. And now when you talk about digital securities, what are we providing that's new? We're providing public access to asset classes that were typically private, i.e. venture, early stage companies that would typically go the private company route or private placement route, the venture capital route, and not have access to the public routes. But I think, again, it comes back to the quality of assets. I think if more people actually found out that they could invest in Curzio research rather than Dogecoin. Dogecoin's purely speculation based on most people going in and out of it, or an Elon Musk tweet. Curzio Research is an earlier stage growth company that no one could normally get access to, and now it's available to global retail investors. And you guys have a track record, revenue, audited financials, and again, people didn't have access, and that's when a lot of the value creation is created, right? Venture capital firms look for that 100x return. How do you get a 100x return? You invest way earlier in the growth of a company. I think where the regulators didn't want public markets to access early stage is because, one, there was higher risk, because a lot of companies fail earlier stage. The second is liquidity, right? If they needed the money for any reason, they'd be protected. They could sell the shares on an open market. Now we're combining the two things together and saying, look, yes, there may be more risk in earlier stage companies, but you have all the information available to you as if it's a public company. So you have all the data to do it. Now, should you diversify? Yes. That's always, what an investor should have on their mind. But seeing a company that has revenue growth, a real business, operating metrics, and information you can see online from a public context, why would you not choose to invest in that venture stage company over another coin that flipped to you on TikTok or something like that? So I think people need to recognize that there's real equity in the digital security space, and it's going to be in assets you didn't have access to before. Real estate, tokenized Ferraris, you name it, you'll have access to it, and that's really what I'm building.
And, just educating people on this market, right? And I want to show something here, and this is from the Tokenist. This is how much 544 trillion worth of assets could become tokenized. I mean, they're talking about all the assets. That's not going to happen, okay? Not all of it. And even if you lower that number and say real estate owned, it's 200 trillion or whatever it is. But even if you take 1% of that, you're looking at a monster industry of whatever it is, 5 trillion. And when you look at that number, and we throw trillions around all the time, so I don't know if people can put this in perspective. I follow all kinds of trends. I've been doing it for most of my career, close to 30 years. You're looking at what are some of the top trends? Marijuana. We look at cybersecurity. We look at ESG. You could take the 5 biggest trends, and this is like 5x to 10x bigger than all those combined. If 1% tokenize our assets, and you say, why would they tokenize our assets? Well, you're going to tokenize your assets because, one, they're illiquid, so why not sell off 20% of commercial real estate that's $100 million? So now you have $80 million asset. Once you have become publicly traded and you tokenize these assets, it inflates the value by anywhere from 40 to 60%, which is great. It's almost like you gave 20% away from your company. You just took 20 million in-house, and now you have you still own 80% of it, which is great. Now you can take that 20 million and maybe invest in other real estate. That's good for that person who owns commercial real estate. What about the investors? It's also good for the investors as well, right? Because the investors, I would never, a lot of people don't have access to commercial real estate or to bonds and things like that. Well, now you could trade this on exchanges shares. You could do that for art. You could do it for anything. But when you see the potential of this market, it is absolutely incredible. And now to just see it open up, it's remarkable. Now, I want to get into what you're doing with your company, which is digital markets, where a one-stop shop. Explain what that means, because you know what it means. I know what it means. I went through the whole entire thing going from A to Z. And when you really look at everything from A to Z, holy cow. I mean, you're looking at just legal compliance issues, capital raising, structuring the company right, board of directors. You're looking at transfer agents, being in compliance after you're publicly traded. I mean, everyone's like, wow, I could do this. I own like 5 restaurants. I want to turn this into 50 restaurants and let's raise money. But, a person like you is a necessity because there's so much in between. Talk about that, because I don't want this to get lost on anyone coming into any of our companies saying, hey, you know what? I'm interested in doing this. It's not that difficult to do, but it is a process, and you got to work with the right people, right?
Yeah. What we ultimately want to be is the connection between issuers and investors. We want to simplify that connection. We want to ultimately be the marketplace of marketplaces. We're the technology layer that sits on top of the trading venues. So, for example, if you think about Uber or Airbnb. So Uber, right? Taxi medallions, highly regulated industry. Uber is in the business of cars, right? They're in the business of connecting the people that wanted to ride and the people that had cars. They became a technology marketplace. That's what we're building. So we have deep ties into this digital security stock exchanges and alternative trading systems. So the trading venues, what are they really good at? They're really good at trading. They're really good at regulation. They're good at reporting. And they're not as great as you can imagine on UI, UX. They are not great at sort of evolving with technologies. I think there's a marketing element as well, but what we are building is the technology layer on top of the trading venues. And what does that mean? So investors can trade on their phone. They can get access directly to a company through their website. They can facilitate, we can allow issuers to facilitate trading directly on their platform, so they can control a lot more of the UI UX with the investor. And on the investor side, it's, how do we get them to KYC one time and passport them across different areas? Back to the issuer, tokenization, cap table management. Do you want to do a private placement or public listing? Being able to control all that from one dashboard. So, today, as you mentioned, we're completely obsessed and focused on the trading and liquidity of the markets, because if that doesn't work, this whole thing is broken. So we need to get that to work first, but eventually moving backwards away from the exchange all the way to two founders in a garage, want to tokenize, manage their cap table as they hire employees, issue them shares all through this platform, pay $100 a month sort of fee. When they want to fundraise or do a private round, they upgrade to a next service, get an Invest Now button on their website. As they grow, and if they're ready to list on an exchange or do that, we'll take them to the next step, but they'll monitor all of this within their platform. We are also founding members of a US SEC transfer agent. So we generally think of transfer agent, tokenization, sort of cap table management, and some big name firms in the space, right? So you've got Carta X, who made their name off of moving everyone out of Excel to more an automated system, and then they did some vertical integration in terms of what they offer. Securities, tokenization, transfer agency. We view tokenization and cap table management and transfer agent as generally very important work, but commoditized. I think it's important, but it shouldn't be the driving factor. We should make this as easy and accessible for issuers alike, because issuers aren't going to go this direction if it's complicated. So how do we make this a fully integrated solution? So our tech and our job is to kind of bring all of those things together. So when you come to digital markets, you don't need to know what happens behind the scenes. We may be partnering with First Transfer as the transfer agent, but it's sort of irrelevant to you in terms of a solution. So we're just trying to make it easy for you to raise capital at the lowest cost of capital to the broadest audience possible, meeting your objectives. I think most people, not everyone wants a global investor base, but more companies are becoming global because they're online, because they're digital. So you do want a global audience. Direct to consumer businesses, why not have retail investors who use your product and are also investors as part of your business? And so for us, building the sort of Robinhood technology, Fidelity brokerage layer on top of all of these different trading menus. So you look at our marketplace, you find a security you like. Do you really care where it trades? No. Your API will do best order execution routing across all of these different exchanges. And in terms of an issuer, you just want to be able to get an access to the right audience and the right investors. And so building that marketplace out.
Yeah, no, I hear you, because even another challenge too, like you said, you want to make it easy for everyone, but it has to also be something that's exciting. When people say, "Hey, have you invested in crypto?" No, well, I invested in Doge at 0.001 cent, and I'm 1,000 turned into $30,000. That makes that an easy story to tell. It makes it compelling, makes people want to research. And I think we're pretty close to being there right now, where you're going to see more and more, especially over the next 6 months, next 3 months, actually, more and more of these issues start trading on alternative trading platforms and exchanges like Merge and things like that. And then when you see these things come out and you see the gains that people can make, again, it is a high risk. You're investing in earlier stage companies. I could tell you firsthand, as someone that's done this for a long time, most of them fail. But at the stage you're investing in, if you're right on one of these out of 20, one of these out of 50, it's going to be life-changing. It's going to be investing in the Microsofts or the Apples, right? You can't really say Google came out, whatever, a little bit higher price, and Facebook as well at a larger valuation. But imagine investing with these guys when they had less than 100 employees. That's the opportunity you're going to have with these companies, where those gains could be unbelievable. And these are real companies, equity stake, which makes it exciting. And I guess that leads to the last question here is, where do you see this industry, let's say in 3 years? And then in 10 years, right? So we have a long-term view and 3 years. I mean, because you and I have spoken 12 months ago and said, wow, here it is. It's coming. And it's like, man, I can't believe. Now we have a different conversation. And I know we're going to have a different conversation 6 months from now. But what about, let's go for 3 years and 10 years. Where do you see this in terms of businesses starting to tokenize, everything coming together? I mean, could this happen quicker than that, or is it going to take a little bit of time?
Yeah, good question. One thing I want to mention, Frank, is who are the winners going to be in this space? And I do think it's going to be sort of three parts. One is going to be the trading venues. So I think the exchanges in first and foremost, and then the ATSs and MTS as a secondary distribution channel, because that's where all the trades happen, right? And that's how they make their money. I think folks like us, in terms of being the technology layer on top of that, how do you connect all these things? How do you make it easier for issuers and investors to access these trading venues? And then I think folks like you, Frank, at Curzio Research, I think the reality of it is there's going to be a lot of people out there seeing a lot of different things and aren't going to know what to invest in. And so I think, large cap companies on NASDAQ and NYSE have Wall Street research. So at least you have sort of a third party perspective on a certain stock, but that hasn't really been built out yet in this ecosystem. So I think finding folks that you rely on have integrity that you can actually use as a sounding board as to how to think about investing. Ultimately, investing is do your own research, but getting all the intelligence you can. Again, the winners here are going to be those three: the people that can help you think about what to invest in, the connectors into these trading exchanges, and then these trading venues. Right, once the volume takes off, like Coinbase did, right? Coinbase, FTX, Binance. And reminder, by the way, FTX, you know where they're incorporated? Antigua and Barbuda. You know where Binance is incorporated? Malta. And so the market doesn't care where these companies are. It's online and digital. These are 20 billion plus dollar companies. In terms of where's the industry going, you're right. I think you and I have kind of been, hurry up and wait several times at this point. I do feel like, and you and I both said it sort of independently in different conversations, and I've had with other folks as well. This feels different this last 6 months in terms of adoption, understanding, and I do think crypto and a lot of the trends have really gotten people over the technology and not questioning it anymore, its validity, and understanding that we do have to follow regulation, and ICOs and all these things gave it bad name. I think, 3 years, I think we're still sort of getting, our grounds covered on high quality assets, adoption, trading liquidity. In 3 years, I think you're going to start actually seeing a lot of these things we've talked about, like NFTs, tokenization of Ferraris, art, commercial real estate, on exchanges where people can buy and sell them at will, at real volume. I think fractionalization is going to be huge. So making it accessible, $1 is a high amount of currency. $1 is high in some countries around the world, but making things chopped up more accessible and easier to move around. I think people are going to recognize the power of other things that benefit investors, like automated voting, better distribution or dividend paying. So instead of this quarterly dividends we pay, doing that monthly, quarterly, and in fact, as far as daily, in terms of different businesses that produce and spit off cash flow immediately on chain. You receive the money, you click whether you want it reinvested, you click whether you want it in your wallet, you decide what currency you want it in. More on ramps and off ramps. So, Merge, for example, is integrated with Circle and allowing crypto to on ramp. I think we're going to see a lot more of that. I think the crypto world and the security world merging pretty heavily, and people starting to diversify away from having so many crypto holdings into digital securities, easily using stable coins and other cryptos. That's going to be big. For example, some of the ATSs out there, and I'll use T0 as an example, today can only accept ACH and wire, right? Like they should be accepting crypto payments. So there's still some infrastructure stuff to build on and off ramps to the different exchanges. That's, I think, going to take some time. I think the US does not recognize a digital security as true ownership. They use the traditional method. So frankly, in the United States, owning a digital security is more of a marketing thing than it is outside of the United States. But I do see eventually the US getting there in the next 3 years. I think that's going to be a big change. Folks like Paxos have a no action letter from the SEC to actually trade and settle real shares on their blockchain, which is huge. I think they've raised a significant amount of money or doing really interesting things. Our view was outside of the United States, you can do a lot more to advance the industry than inside the United States, just because of regulation takes way more time than anywhere else. 10 years, you're talking, getting into DeFi, being able to loan against your securities, connecting niche issuers with niche investors in different forums, everything on the mobile phone. NFTs are interesting to think about in terms of sort of laughability in terms of owning a picture. But the world is headed that way. The world is headed online, and just making these things more easily accessible, but being able to essentially tokenize and raise capital on anything, and allowing securities to flow almost as if it's payment, just a medium of exchange. You can use a security to buy things with, because in the smart contract wallet, we've KYC'd and et cetera, et cetera. Always need to prevent KYC AML. Hopefully we can get to one solution on a global basis. So you do KYC one time and every country recognizes that. I think it has to go in that direction as we start getting more cross-border and global. And I think, look, every country wants to prevent fraud and money laundering and all those elements, but making it easier for sort of capital flows to happen, I think, is definitely in the 10-year horizon.
Nah, it's great stuff. And real quick, we got a minute left here. If someone wants to find out more information about you, your company, how could they do that, Kyle?
Our website is digtl.co, digital.co. I'm on Twitter a lot at Kyle Frye.
Okay, and I'm bringing up your website now, and I like the fact that you actually have a little thing on us as well, which is cool, right? It's always good. I saw that, which is awesome. But Kyle, hey, I want to thank you so much for coming on, man. I really appreciate it, and you've been a huge help for us. Tremendous help in terms of getting us listing on Merge, going over everything in terms of compliance and making sure that we were okay in that, and that was a big help for us and made things a lot easier. So I just want to say thanks a lot, man. I really appreciate it.
Well, you're welcome. Happy to be here. And look, like, you guys are the ideal client. High integrity, wanted to do things right, and came in and knew that there was a ton to learn. So thank you.
No, I really appreciate it, man. Okay, so thank you so much for coming on, and I know you join us again soon. Take care.
Talk soon. Thanks, Frank.